Welcome to Insights. I'm Eric. Thanks for stopping by. We're going to talk about Bitcoin today. Bitcoin is really an interesting setup. We're first going to talk about it in general terms for open content for everyone who's watching along and understanding how the evolution of the trade works and how the primary trend drives the three time frames and the composite trend. And then we're going to focus on what's really important today, which would be the energy build. And the energy build is very specific. It provides unique information in terms of Bitcoin and actually the risk on and risk off trade. So we're going to dig into that for the subscribers. I'll start this off. We're going to talk about the evolution of the trade. The evolution of the trade focuses on three time frames simultaneously: the daily trend, the weekly trend, and the monthly trend. We call them the tertiary, secondary, and primary. We can see that the three time frames are not in agreement. The daily trend is down, the weekly trend is up, and the monthly trend is up. It's this really defines a consolidation shorter term. It's a setup which we call in the evolution of the trade an alignment and energy phase, because the primary trend is up, but the three time frames are no longer in agreement. And eventually, if this dips down and then comes back up again, we'll generate a reset. And whether that reset is something that you want to escalate the core position. The core position is up, so we're long Bitcoin. We've been long Bitcoin for 9 months, and it's produced a 262% return. Whether or not the coming reset, whether it comes after the daily dips down and comes back up, or the daily continues to go down and flips the weekly down as well, and then the two time frames flip back up, it generates a reset. It's really going to be contingent on this energy, and we're going to take a closer look at that in detail for subscribers. Visually, the three time frames look like this. We can see that the daily is here and the daily is currently down. The daily has been down for 3 days. It was recently up. Every time you have an uptrend, it's a green box. Green boxes are measured by in terms of distance and duration. So there's a time cycle and there's a price cycle. Those cycles are recorded here in the tertiary column. You can see price cycles are right here, BUS for up, and the time cycles are BUST for up, and then for the down, they're measured here and here. If a cycle is negative in terms of price or in terms of the time, it's negative. That means it's below its mean, and there's plenty of time and price movement left in this one. Time cycles don't have to go to their mean. They can extend well beyond them. When they get extended, trends get vulnerable. Sometimes in a light correction, you'll see the daily trend dip down and then reset back up. It really depends on energy, but visually this is what it looks like. We're in a downward movement. The weekly trend is weekly is the secondary time frame. That's currently up, so the green box has been up for a while, but we can see green boxes can go up quite a bit of time, so this is not even a very long green box. The primary trend is highlighted down here, and again, these are just visualizations of these trends that are reported right here. This is the weekly and this is the monthly trend, and the green boxes represent up. Green boxes can be significantly higher, so this one, or significantly wider. This one's not very wide, so it's still below its mean, and that's exactly what this particular statistic, this BUST, measures. If it was a box that was at its mean, this number right here, as 9 months goes up, this number would go above 0, and eventually it would get extended. But since it's still below, it's telling us that the current 9 months primary trend is a relatively short cycle still, and there's still time to go. The weekly is a little bit different. At 36 weeks, we're above 0 now, so we're slightly above the mean, so that we know that the mean cycle for the weekly or the secondary trend is probably 36 weeks. But that doesn't mean it's going to have to stop. It can continue on, and often does. Usually when these numbers get above 2, they get extended, and when this number and this number get above 2, it's really rare. As we move down the time cycle, primary trend cycle readings rarely ever get above 2. They do, but usually that marks the end. Weekly can get higher than that. The daily in a volatile market can get pushed substantially higher than 2. It can get, I've seen them go as high as 5, 6, 7 standard deviations. But again, it gives you an idea of how stretch trends are. So when people are chasing a trend shorter term, whether you trade the daily trend or the weekly, you should always be keeping an eye on the monthly. You should always follow the evolution of the trade, which is, and you want to go look at that in the blog, and I'll leave a link under this video for people to do that, read about how the trade discipline works. But you really never want to chase when these cycles get extended. Other people will do it because they have no concept of time and price cycles, or concepts of time in general and what's extended and what a normal cycle is. And what happens is you buy late, or you sell late, and into a rally, or sell into a decline, and then you kick yourself in the pants. But if you have an understanding of these cycles right here and follow the computer, you'll never do that. You'll maintain your discipline and say, this is not my time. The time is to buy resets, and that's what we're waiting for. So eventually this will turn back up. It'll bring the composite trend. The composite trend is the combination of the daily, weekly, and monthly trend back into upside alignment. And again, what we want to focus on will be energy and whether that's a proper setup. So we're going to talk about energy now. So I want to thank people who are not subscribers for watching the video. Go down and click the links below and learn more about the evolution of the trade and learn more about the matrix itself. And if you have any questions about how this stuff works, you can contact me there. You can make some comments below the video. That's great too. Or subscribe to the YouTube channel. If not, you can come back and subscribe to the matrix. My guess is that most people have no concept within the fractal nature of trends, and when they start to understand that, and they start to understand the price and time cycles that exist within them, and then really dig into energy, which is absolutely critical of why trends move in and out of alignment, why they expand, why they ebb and flow, which most of the public doesn't have a clue about. You'll probably need to have the matrix in order to properly understand what's taking place within trends themselves, and why people foolishly chase when they should be standing on the sidelines. And again, it's a natural learning process and a natural evolution for all traders. So thanks for watching the video, and we'll talk to you guys later.